Alrighty, my name is Griffin Olson. My capstone presentation was on the Toshiba Corporation accounting scandal that happened back in 2015. This presentation will go through a number of components with what happened during the accounting scandal, the consequences of the accounting scandal for Toshiba Corporation, where the organization stands now, a little bit of history about the corporation, how their culture relates to the ethical issue, the financial strength and weaknesses of the company, also some key financial ratios and how that relates to how Toshiba can get back going inside their market, and then some solutions that I feel Toshiba could take to maybe revamp their investor relations, revamp their identity within the culture, and things of that nature. So to start with the presentation, we'll go over the ethical issue that happened. It was an accounting fraud scandal that happened in 2015. So the company and top-level management used manipulation of their employees to falsify earnings by $1.2 billion in 2015. Now this was a problem because the employees were manipulated even if they didn't want to pad the earnings reports on the income statement for this organization. But the problem that related to the scandal was the culture didn't allow the employees to speak up, which meant that there were policies that said subordinates could not speak up to their superiors. So this led to a lot of problems and allowed for Toshiba to kind of revamp their culture, revamp their board of directors, things of that nature. So this scandal overview, it was an accounting scandal that falsified earnings by $1.2 billion due to the manipulation of employees to pad earning performance. So the consequences, as I just said, one was the new board of directors. Scandal hit Toshiba is trying to inspire investor confidence with a revamped board of directors following the resignation of many executives that led to the accounting fraud. So this company is well known in Japan. They've been operating for a long time, since 1875. They had a huge culture inside the Japan corporate governance system. So a lot of the problems were that they didn't respect the Japan corporate governance system, along with that system being weak. So there was really no standards, ethical standards, production standards, things of that nature that Toshiba could go by. So in this case, they lied to the investors on their earning reports, lied to the shareholders, and said that they were making more money than what they were, because ultimately their numbers were too embarrassing to tell straight up to the investors, so they had to lie to them by falsifying their earnings reports. So the consequences were they had to renew the culture, and one of those ways was renewing the board of directors, with a main focus on strengthening Japan's corporate governance system as it related back to Toshiba's corporation. One of the other consequences was that they had to post a net loss for the year of 2015, which is very troubling for investors because ultimately they are investing money into the company. If they're presenting a net loss for that year, that means that they are losing the money that they are getting invested back into that company. So this alone will scare investors away, take away stakeholders, things of that nature. So they also had $1.2 billion in impairment charges related to nuclear power plants, semiconductor plants, appliances, and automotive businesses. So the main problem that they had with the consequences were that they had to sell their microchip division, which this is the biggest part of their industry. It was the most productive, they made the most money off of this, and they had to sell it, which obviously meant a sign of desperation. This business makes the information storing brains inside millions of smartphones, digital cameras, and any other devices, and has been the biggest contributor to Toshiba's profits in recent years. Like I just said, the move is evidence of Toshiba's desperation for cash after the punishing nuclear-related losses. So we'll move on to the next slide. The Toshiba Corporation now. As it says on the PowerPoint, they are in a ton of legal battles. Banks are getting involved to loan them money just so they can stay afloat above ground, so that the company doesn't completely tank. Basically, they are diminishing. This company is completely diminishing. You'll see that with their financials, a lot of negative numbers, things of that nature. They had to warn their shareholders that they wrote off billions of dollars to fix the damages of the scandal. This could amount to $4 billion to $7 billion, enough to put their future at risk. So like I just said, they're diminishing by the minute. As of today, the company has been served with 28 complaints, including 26 complaints that were announced on June 13, 2017, which is after the scandal came to light. So the total amount in these actions is 117 billion, which is 117 billion yen, which is just over 1.3 billion American dollars. So now they are struggling just to stay alive. In conclusion for this slide. The history of Toshiba, just some quick facts. They were established in 1875. They were responsible for the pioneering of electrical products and electrical industry. Their main rapid growth periods were here in the 1950s. In the 1990s, when this company was really thriving, they had the adoption of concentration and selection. Just a little bit more about this. The Toshiba Corporation established itself in July 1875. Throughout history, Toshiba has developed numerous pioneering electric and electrical products that represented the first of their kind, just like I mentioned earlier in the slide, and they were known anywhere around the world, not only in Japan, but in other countries, the U.S. included. In 1873, the Ministry of Engineering, responsible for promoting Japan's modernization, commissioned Tanaka, who was the guy who founded Toshiba, to develop telegraphic equipment. He then built the biggest factory that Toshiba has ever owned that was still running at the time of the scandal. So in the 1950s, when they were really thriving, Japan's economy was booming, leading to rapid growth in the heavy electrical machinery, electronics, and communications industries. Sales and profits grew quickly as Toshiba created novel products, developed original technologies, expanding existing factories, and built new production facilities. In the 1990s, they had to go away from what they had been doing in the 1950s and adopt this concentration and selection, which is a way that they achieve sustained growth. This involved concentrating resources in sectors with growth potential and new businesses while selectively promoting growth in mature or declining sectors. The aim was to promote an even stronger global contender by pursuing the concentration and selection approach while creating the world's first and #1 products and services that are the most competitive and captivate customers. Basically, in their product market, as they were going through history up until 2015, they were pretty much the most well-known people for things such as microchips that went inside your cell phones. Everybody's heard of Toshiba. They have many competitors, Apple including one of them. They were ahead of those guys with the microchips. They were almost partnered with Apple at one point in history. So we'll go into their culture and more about the ethical issue. Their culture, they were solely focused on innovation and growth. So like we saw, they were taking different approaches to create new product lines, find new markets, meet the demands of the customers. They were very, very focused on this. So as you can see here, I have products over people. This isn't one of their things that they said on their website that their culture was about. This is something that I found as I was reading through the culture.
Dawson, we hunt to the office. Dawson.
Toshiba says, we are taking full advantage of our technology's expertise and many years of experience to achieve stable growth in 4 business domains with their core focus in infrastructure. So basically, when you go through their culture, all they're talking about is sustaining growth, sustaining new products, creating relationships with other businesses to where they keep coming back to buying their products. You read nothing about in their culture that deals with their employees. So obviously, this is evident in the case against Toshiba regarding their accounting when evidence proved employees had no options to deny the request of the authority figures when asked to pad the earnings reports. The company states that they are an organization that has individuals with a broad outlook who seek out the new and develop original concepts and expertise. Toshiba basically wants their employees to perform well for the sake of the business, but they care nothing about their well-being. So this, in turn, allowed top management to basically treat the subordinates as they wanted, to pad the earnings reports, even though they knew that it could possibly lead to a situation like this. And this is where Toshiba stands today. So, ignoring Japan's corporate governance structure. I mentioned this earlier. It's a very, very weak system, very few ethical standards, very few corporate business standards. But the main problem here was the problems were execution based. So the problem was not lying within the board of people that were running Toshiba, but it was with how they functioned. So while it's not simple to while it's not a simple matter to pinpoint what exactly should be fixed, the Toshiba case serves as a reminder that the real issue is not board structure, but ultimately rather how the actual board was functioning. So, as a part of its American style board committee system, Toshiba had an audit committee of the board with a majority of outside directors, an arrangement which experts generally regard as superior to Japan's traditional internal corporate auditor system. This system was very flawed. As you can see, there was no one to go back and check the earnings reports, check the liabilities, check what they were going to earn. So they basically had to lie because the liabilities were way more than what they were bringing into their company. So this caused major turmoil within the company, within Japan, and as you can see, I've said again, this resulted in changing the board of directors. That was the main change that they made within Toshiba. They had to revamp their whole board of directors, bring in outside sources to bring kind of a new vision, new ideas to the culture so that Toshiba could rebound and take away from this system. All right, so we'll get into the financials, the strengths and the restraints of the company. So as you can see, the strength, the enormous market share. Toshiba is one of the world's largest manufacturers, solution providers, and marketers of advanced electrical and electrical products and systems with a global network of more than 550 consolidated companies as of March 31st, 2016. So they work with over 550 different companies around the world to get their products into markets that they could sell and make more profits. So just to give you kind of an idea, they were in the nuclear power generation. They own 27% of that, or they have a market share of 27% of that. Geothermal power, 26%. They also have a monitoring and electrical system control of 25%. So that basically is saying that Toshiba, they own a vast majority of their industry, so that the competitors, they have the other 75%, depending on how many companies they have. So that gives them a competitive advantage because people trust this brand, and this is what is giving them hope for possibly revamping everything that happened within the accounting scandal. So the weaknesses, the inefficient internal management, obviously, because that was the whole reason of the accounting scandal. Poor management led to falsely reporting the earnings, not letting subordinates come and talk to you about problems, things that they saw within the business. There was no learning curve for management. They just did as they had always done, and who knows how long this has gone on. And obviously the weaknesses with their financials right now is they're using a lot of their money to deal with the complaints and compensatory damages that resulted from the scandal. So the operating loss of the company was $708 million in the fiscal year of 2016, compared to an operating profit of $188 million in 2015. So obviously that's declined. The net loss of the company was $460 million in the fiscal year of 2016, compared to a net loss of $37 million in the fiscal year of 2015. Although Toshiba suffered these major losses, there are still positive signs that point in the direction that Toshiba will bring themselves back to normality, including their enormous market share that they own, as well as the focused expansion of manufacturing, which they're trying to find new places to manufacture where they can develop new trust, new investors, new stakeholders after everything that happened. So now we're going to go into a couple key ratios that could possibly tell us exactly how they're operating right now, tell us how they're using their assets, tell us how much debt they have, tell us how much investors are getting a return on their investments. So the first one that we will talk about is the turnover of assets. So as you can see in 2014, they were at 1.06, which this ratio means how quickly they're turning their assets into revenue. So how much they're using the capital that they have to put that into products, put that into manufacturing, put that into getting this out to meet the demand of people and turning that into revenue. So they were doing pretty well in 2014 and 2015. And so we look over here, 2016, it dropped to 0.96. That was almost a whole point in the ratio. And this means that they're just simply, after the accounting scandal, they're not turning their assets into revenue as quickly anymore, which obviously, because they're having to deal with legal fees, complaints, compensatory damages, all that stuff. So ultimately, they are not performing as well as they were before the accounting scandal. So that was the first one, pretty simple, probably the most simple equation that we'll go over in this presentation. The next that we're going to go over is the debt to assets ratio. So on your, when you look at all the financials, you'll have assets, you'll have liabilities. Assets are what you have, liabilities are what you owe. So liabilities would mean debt. The chart shows right here that there's a decrease from 2014 to 2015 in terms of their debt to assets, so they were doing pretty well in 2014 and 2015. It says 0.77 in 2014, dropped to 0.75 in 2015, so they had less debt, or they had less debt than they did in 2014. Obviously, after the accounting scandal, you go over here to 2016, this number goes way up to 0.88. So again, this right here demonstrates that the company is taking on more debt due to the complaints, all the repercussions of the accounting scandal. So this is another reason why, as we mentioned back earlier in the presentation, banks are bringing in loans, because a lot of banks are invested into this company. So they're giving them loans in order to help pay off these fees in hopes that they can turn it around and start making a profit and getting a return on their investments. So basically this this equation says that that now they're not generating enough cash to meet their debt obligations. So their debt right now is just overwhelming. It's probably going to get worse here in 2017, or 2017 to 2018. Okay, profit margin on sales. This is probably the most troubling, or the second most troubling ratio that I found on this company. Like the two previous ratios, Toshiba's corporation profit margin is moving in the wrong direction. As you can see, it gets negative in 2015 and negative in 2016. This reason right here, that it was negative, this was before the accounting scandal. This is the reason they were afraid to point this to investors, because ultimately they were losing money. So the following 3 years of data show a decrease in the amount of Toshiba Corporation's profits. Beginning in 2014, Toshiba Corporation's profit never really thrived, as it displayed 0.92%. So they were doing okay in 2014, which is probably why it started leading to this scandal. The succeeding year, profits dropped to a negative number with negative 0.57%, meaning the company lost money altogether in that fiscal year, which is why they had to post a net loss in that year, like we mentioned earlier in the presentation. Following 2015, Toshiba saw its profit margin decrease down to negative 0.85%, a loss of more than 8% from the year before. So Toshiba's cost that they have on their products, compensatory damages, legal fees, you'll hear that a lot in this presentation. They are exceeding what they are bringing in and making on their profits. So therefore, this ratio is going to be negative until they handle all of those fees and get back on their feet. The last one, the most important one, is the return on equity. These numbers are very troubling because these are relating directly to the investors of the company. So we see here that it starts out at 5.84% in 2014, so the investors were getting 5.84% return on their investments in this time period. We go to 2015, they're experiencing a loss on their investments. And then after the scandal, they're at negative 65.12% of their investments. Their liabilities, which is what they owe, are far exceeding their assets, what they're bringing in. So the investors are not going to see any return on their investments, which this is why
Emily Nichols or Sherry Deal, call the office, please.
Investors will be turned away from this company at this time. That's why it's their job to find solutions that they can help revamp investor relations and things of that nature. Conclusion of the financials. There's negative trend lines. As we saw, everything was going in the wrong direction. And this is simply just because of the accounting scandal. They had to report a net loss in 2015 and ultimately had to help pay back all the problems that happened with the scandal. The competitors are really benefiting from the scandal in Toshiba because ultimately they're getting to take over some of that market share. And there actually is a potential for recovery with this organization due to the enormous market share that they have, but they're going to have to act quickly and find solutions in this case. After reviewing the Toshiba Corporation's financials, one can conclude the trend lines are moving in a negative direction said before, clearly the scandal is influencing the bottom line for Toshiba. As a result, Toshiba competitors are benefiting from the scandal. Some of the major competitors that are benefiting are Dell, HP, Lenovo, Canon, NEC, Sharp, and Fujitsu. The company directly competes with Samsung and Apple in the laptop and ultrabook categories. Toshiba competitors are also adding the market share, as I mentioned before, and improving their financial status with the losses suffered by the company. Fortunately for Toshiba, the size of the company has allowed it to control a good portion of market share, potential for recovery, as well as continue to expand across new markets. So Toshiba needs to act quickly in order to prevent more repercussions happening from this.
Pam Kane, can you call the office, please? Pam
And
Kane.
ultimately driving their company into the ground. So the solutions, the most important part of the paper and the most important part of the essay. So the solutions that I came up with: manager ethics training, earnings guidance, and renewing the culture all together. These two kind of lead into renewing the culture. So the reasoning behind the ethics training for managers will be to instill the importance of corporate governance back into Toshiba. Following rules, having standards, having ethical standards, that is a vastly important way that Toshiba can revamp their reputation within the society. Japan's first formal corporate governance code went into effect on June 1st, and while many companies preempted the rules by adding independent directors and improving transparency, Toshiba has fallen by the wayside in several metrics. They weren't very transparent. Investors didn't know what was going on inside the company, so now they're being hit pretty hard, getting losses with their money. Thus making the actions performed by its audit committee, the people who handled the padded earnings reports, unethical and unacceptable. The ethics training program for Toshiba will bring back the balancing of interests of stakeholders, employees involved in Toshiba, and the people of society. It will provide guidelines for management how to treat employees, giving them opportunities to speak out against management if they feel uncomfortable performing jobs, how to pursue everyday business operations, and provide ethical guidelines that will be followed on an everyday basis. One of the risks of manager ethics training is that this will take away from profit opportunities. They will have to take time out of their weeks, out of their days for managers to be train their employees, install a code of ethics, a corporate governance system within the company, as well as respect the one in Japan. This will ultimately take time, and it could be very damaging to Toshiba, but I think this would be the first step in revitalizing the culture within Toshiba, manager ethics training, because it all starts at the top. The next is earnings guidance. This strategy makes sense for Toshiba, as falsifying its earnings is the main cause of the turmoil for the company. If the organization adopts earnings guidance, they will be giving more information to investors more often, which they will basically be taking them along the journey, asking them for advice on decisions, asking them questions about certain things. This alone will create better trust. This will create better relationships, and ultimately it can help the investors see that they actually are trying to make an effort to change everything about their company. That way that they will stay invested in the company and not take their investments elsewhere. One of the risks of this right here is that the reputation could already be ruined. Investors may not want any part of this because they've already been basically screwed into the ground by the company's actions. But I think this is a good first stepping stone, and I believe some investors would take on this because they would have some say-so in how their money was being used. So, renewing the culture. This goes back to manager ethics training and earnings guidance. In order to have an effective culture, you have to have investors that believe in your culture. You have to have managers that, I guess you could say, instill the code of ethics, make people abide by those rules, and also they have to behave ethically. So both of these things go into renewing the culture. So Toshiba basically has to look inside themselves, figure out where it went wrong, which they know where it went wrong, but then figure out strategies in a way that they can make their company more efficient, follow the rules, and ultimately make themselves better in the image of society. Conclusions of the scandal. The scandal had a detrimental impact. Obviously, they're losing market share, they're losing money, their profits are negative, their investors' money that's being used is coming back negative, they're losing money on all their investments. The culture and ethical standards need modification. So as a result of the scandal, they need to take a look at their culture, take a look at their ethical standards, modify those to meet the needs of society, meet the needs of the people who work for the company, meet the needs of the board of directors. If that board of directors needs to watch over the management, oversee the whole operation within Toshiba, and ultimately make sure that no more unethical behavior happens in order to prevent a bunch of lawsuits, losing money, all kinds of things like that. Investor relations and shareholder trust need to be built back up in order to sustain success. They're not going to be able to come out of this by themselves. There's no trust within the society, no trust with people who want to buy their products. They've already sold off their most successful portion of their business. So in order to get things like that going again, they're going to have to inspire investor relations to where they come back and invest money. So this trust, these relations are going to be the key component to Toshiba reviving its economy. They have to use earnings guidance to create those relationships. Let them be part of the financial decisions. Modify the ethical standards and their culture so that customers, employees, management, they all feel comfortable within the organization. And ultimately that will renew the culture, bring the Toshiba Corporation back up from the ground, and continue on the successful 140-year company. Thank you.